My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I got people to make friends. I'm just trying to make you a little money. It's my job, not just to entertain, but to educate, teach. Call me at 1-800-743-CNBC or tweet me at Jim Cramer. A mega cap company doesn't get to stay a mega cap company unless it's indispensable and brilliantly managed with spectacular balance sheet and tremendous prospects, all of which we seem to forget at the drop of any bearish hat. Right now, there's a big strike over to Nasdaq, a buyer strike, frankly, where the most beloved and respected companies, the mega cap nation states of technology, have something going out of style. Oh, we saw it again today with the Dow advancing 57 points. S&P dipped 0.32%. But the Nasdaq, where the mega caps all live, it tumbled 0.89%. It all starts with Apple, as it often does. The $2.78 trillion market capitalization entity that's arguably the most admired business on earth. The stock's been clobbered after reports about how there may be an iPhone office ban for Chinese government and state-sponsored entity employees. If true, it could be a real hit to earnings, no doubt about it. But remember, China could be opaque, fickle, and capricious. I want to focus on the knee-jerk reaction to the story, though, because it's typical of the action in the mega caps, not just Apple, but also Amazon, Alphabet, Tesla, NVIDIA, Meta Platforms, and to a lesser extent, Microsoft. See, everybody's always so eager to panic out of these great stocks that it's all too easy for a couple of lightly sourced headlines to trigger a torrent of selling. Sell. With no buyers anywhere to be found. Okay, all right, maybe a little exaggerated, but you don't see a gigantic stock slip from just under 190 to 177 in just a couple of days when lots of people are eager to buy it, do you? Let's take this Apple situation head on, because I know you care about it so much. When the story broke over 2 days that China might be banning iPhones in government offices on day one, and then on day two, the offices of state-sponsored entities, lots of companies there, the sellers came like a wave rolling over a sandcastle. Nobody I know bothered to check whether the stories were written in stone or even true. They sold first. Sell. And then maybe they asked some questions. Why is it like this? All right, here's what I surmise is the reality behind the selling. First, Apple's market cap is now nearly $2.8 trillion. That's down about $300 billion from where it was at the end of July. But the decline's logical, given that the stock had overshot itself. It's up more than 50% for the year at its highs in July. So many traders believe it deserved to come down. Deserved. They say it should never have been that high in the first place. I hate that kind of a pseudo-analysis. Two, China's the only real growth engine traders believe. So if you take it away, Apple's earnings will collapse. Totally untrue, but they don't care. Finally, most damning, and the one we really got to talk about, the endless skeptics who have been wrong the whole way up, grab the mic. See, these are the ones that tell us that Apple's a company that doesn't have any growth in any way, so why would you own it to begin with? Now, you know me. I say own Apple, don't trade it. I didn't change my mind. I don't know where or when the stock will bottom, but I know this. I'm a huge fan of the facts, and I don't know the facts about China. Sure, if Apple loses China like the State Department did unexpectedly in 1949, there's going to be a hit to earnings. But why doesn't anyone else publicly say that, you know what? Maybe Tim Cook, the CEO, can come up with something that offers a compromise. Given that Apple's one of the largest employers in China and the country needs all the employment it can get, we forget that China, once our dominant trading partner, is now behind Mexico and Canada. We just learned that Chinese exports to the world just dropped 8.8% in August from a year ago. I know the Chinese government may be upset with the alleged hardline stance expressed by U.S. Commerce Secretary Gina Raimondo after her recent trip. Remember, she was just on our show. She's talking about building high fences in small neighborhoods. Well, neighborhood basically is national security. That said, the PRC banning iPhones for government employees doesn't help solve their youth unemployment problem, does it? It's over 20%. Or at least it was before they stopped issuing that number because it was too weak. You don't drive off a great employer like Apple when your economy's falling apart. More important, I bring up my acerbic view, because I don't have enough fingers and toes to count how many times I've heard that the best days of Apple's growth are behind them. It's true that there hasn't been a lot of growth lately. No one's dismissing that. The numbers tell you that. What do you do? Like, the numbers don't lie. But growth here has always come in spurts related to new iPhone releases. And if you sell the stock at this moment, please don't forget that you are selling ahead of one. You're also selling it in spite of a bountiful and growing service revenue stream, including new programs, new apps, new content, including some very exciting U.S. soccer and new ideas you never heard of now, but I predict you'll want so much that it'll be painful not to have them. In other words, Apple can reinvent itself in another way if China somehow becomes problematic, because not its excellent phones is how it got to be a $3 trillion business in the first place. It's a great technology company. I don't want to just single out Apple, though. Think about Alphabet. There have been so many times when it's failed to hit its search revenues or earnings, but out of nowhere, you have this first a gigantic franchise in YouTube, and then an amazing offering in cloud infrastructure. Alphabet simply is not a static entity. Amazon used to be a bookstore, just books. I remember visiting Borders almost 2 decades ago in Ann Arbor, where their headquarters was, and they were discussing how they could fend off Amazon. I mean, does Borders even exist? Then Amazon went to music, then general merchandise. Then they basically invented cloud computing with their Amazon Web Services, and then they got into advertising. Every one of these at one time or another has been questioned as running out of gas. I've done some of that questioning myself. But the critics, wrong. Tesla's been buried so many times we need a new television show, NCI Cemetery, to get to the bottom of where it's buried. But has anyone noticed the endless reinvention by Elon Musk and the incredible worldwide success of this man, who's been doubted at almost every turn? Tesla was supposed to have gone bankrupt, I don't know, a half dozen times. Or how about Meta? It hurts to talk about the colossal failure Mark Zuckerberg has had with this metaverse. Pure secondhand embarrassment, at least for the moment, only to watch him keep spending money on it. While pivoting, though, back to the lucrative Instagram business and the fledgling Reels, their TikTok killer. But the pivot, it's working. I know that Secretary Raimondo once said that if you ban TikTok, you'll have a hard time getting the vote of the under 35 crowd forever. I wish she had not said that. I mean, admittedly, it's a fair point then, but why not just say, okay, and that's why we should all go to Reels. Meta change, Zuckerberg change. The only mega cap that's never seriously been denigrated at heart, it's practically is Microsoft. Perhaps that's because it's such an amazing plain old franchise that was already challenged by the government over 20 years ago. Maybe it's because Microsoft is such an incredible cloud computing business, Azure. But you know what? It wasn't always like that. When I first met the brilliant CEO, Satya Nadella, he was telling me, or selling me, frankly, that one day his cloud business could be $18 billion a year. We were walking down the streets. It could be $18 billion a year. I was like, yeah, please. I mean, come on. I was highly skeptical. As it was doing about half of that money at the time, it didn't seem to be important to anyone else at the company other than this guy. Black T-shirt telling me 18 billion. Oh, yeah, sure. Anyway, the company's intelligent cloud business, which includes Azure and a couple of other services and enterprise business, is now a $90 billion business, not 18. 90. Oh, and don't get me started about NVIDIA, which is for ages was dismissed as just some gaming chip company. Before ChatGPT, I was screaming from the rooftops, and you know this, that this $100 billion business was something special, something to hold. Now that NVIDIA is a $1 trillion company, I'm finally hearing good things about artificial intelligence. Thanks for nothing. At every turn, we hear doubts. We're informed of the mistakes, the investigations, the departures, the poor releases, the shortfalls, the disappointments. Do we ever hear about the wins? I'm not saying this is the NFL, which starts, by the way, tonight on NBC, Lions playing the Chiefs, but I'm sure it's occurred to 95% of you that the Chiefs are a better team. They are the dynastic under Coach Andy Reid and the quarterback Patrick Mahomes. Why can't we ever accord any of the companies I just talked about with the same status? Bottom line, if Detroit somehow triumphs over the Chiefs, we may have some short-term fears, but anyone who thinks that the Chiefs' best days are now behind them, they should be run out on a rail. Never fly in sports, but somehow we put up with it constantly in the business media, and all it does is hurt you as an investor. Something I try hard not to do every night when I come out here. Let's go to Bill, Massachusetts, please, Bill.
Hey, Jimbo, how are you today?
I'm doing well. How about you, partner? What's going on?
Fantastic. I've been following AMAT, and I know this is my 4th call with you, and I love how I'm always able to connect with you. It's incredible, this club.
I love that, man. I love that. I like talking to people. The other guys don't. I mean, I walked up from here to get a haircut over at Eddie's. I stopped by a lot of people. They talk and take the picture. Why not? I mean, I'm like, I can't believe anyone cares. Take a picture with me. It's fantastic. Go ahead. I'm sorry. I lost Bill. I talked too much about what Bill. I didn't even get to answer his question. He's probably upset. He's 4-time only. Justin in West Virginia, please. Justin. I directed Justin.
Kramer, how are you doing?
All right. How you doing?
I'm doing great. Thank you for taking my call. It's an honor to speak to you.
Oh, thank you.
I've got a oil and a natural gas pipeline company that I'm just totally confused about, and I see a lot of good things with it, and I also see some red flags. The stock ticker is ET, and I could really use your help.
Energy Transfer and Kelsey Warren. I used to be very critical of it, but you know what? He's put together a mega cap pipeline business that is doing quite well, throws off a lot of cash, the 9% yield. They can pay it, and I got to tell you, in the end. All right, let's go to Edward in Texas, please, Edward.
Hey, it's Edward in Dallas, 107 degrees. Is McDonald's equally hot, or is it a buy, sell, or hold?
Man, I'm so stunned because the Cowboys calling me. It's like hard. I mean, I'm trying to process it. You know, Pollard. I mean, geez, Mike Parsons. That guy. McDonald's is a really good stock, and there was a very good recommendation this morning, which tells me that this is done. And it's been in the wilderness for a long time. At 278, I am actually very, very bullish on it, and I think you should buy it. And thank you for the call, even though you are from Dallas. Although I am going down there to watch that game because it's Sunday on NBC. The issues facing the mega caps might be troubling right now, but anyone who thinks this group's best days behind them, you're kidding yourselves. On Mad Money tonight, Lululemon is stretched higher after earnings. Can the rally keep running? Don't sweat it. I'm giving you my take. Then as investors continue to fret over the potential for higher interest rates, you know what? I'm taking the other side of the trade. And it's a stock up close to 20% over the past month. You probably never even heard of it. I'll reveal the name and whether it's a good prospect when I sit down with the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.